Hi there, welcome to Neppy Invest and welcome to another answer and reply video where I get to answer your questions and reply to your comments to the best of my ability. And I think that's the appropriate words there, to the best of my ability. Sometimes my ability is severely lacking, but that's okay. I also am on a learning journey, just like many of you are. Some people might say I don't have a sense of humor, including just Jim Cramer, although he does mention that I completely missed his joke. Sometimes things will go over my head. Now, the reason he wrote that is because I did reply to one of his comments last week, and that particular comment did go over my head. I had no idea. This actually confused me. Do you hate your life? Do you love catching a falling knife? 5-year chart. Our airline stocks are a little too lovey-dovey. And then he mentioned this company. Now, I'm pretty sure, 65% sure that this company mentioned was just a ticker code ZIM. So I just assume it's Zimplats. And I'm pretty sure he might have edited this because it's got the word edited. And he put in more detail about this company, which is actually called Zim Integrated Shipping Services. And from FinChat, this is something I completely glossed over last week. From FinChat or Fiscal AI, P ratio of 0.8, yield 36.9%, return equity 82.7%. If I saw those sort of numbers for a company, I would say something is off. Something is dodgy. Something is looking weird. Something is weird going on. A P ratio of 0.8. Anyway, so let's go back to his most recent comment. Neppy, you totally missed the joke. You have to hate your life before jumping into this company. Share price has gone from 84 down to $15, even though it probably looks really cheap. So Zim Integrated Shipping Services is not Zimplats. Well, I know that now, don't I? Please add dyslexia to spinnerism. I definitely don't have dyslexia, but I definitely have spinnerism. I could have a look at this company. I did actually start looking at this company, Zimplats. It's a container shipping company, and I just wanted to see if just Jim Cramer was absolutely right, and he is. He was right. This company has a P ratio of 0.8. But if I saw these sort of metrics for a company on the ASX, I would move on to the next company. Something is wrong. Now, one of the reasons why P ratio is a little bit low is because of the debt. This company has a fair bit of debt. Now, most of the debt is financial leases. I'm assuming these are leases for ships, that sort of thing, because this is they provide container shipping and related services in Israel and internationally. I'm not sure if they own their own ships, but why do they have high leases? It's something like $5 billion in leases. So either they own a lot of shipping ports or shipping container, whatever you call them, ships. But anyway, I also had a quick look at their revenue. By the way, this is the cash flow. So I had a look at the revenue income. There was a massive spike in 2021, 2022. So obviously there was a fair bit of tailwinds behind this company in regards to supply chain issues. Those tailwinds have largely come to an end, but the company still looks, based off their financial metrics, really, really cheap. But something, or the market is wary or skeptical about this company. And really, that's all I'm going to get into right now with Zim Integrated Shipping Services. And yes, the share price has dropped. This is the chart, the weekly chart since 2021. And share price was as high as about $90 back in 2022, probably at the height, at the peak of the tailwinds. And share price has dropped a fair bit and nothing trend. There's no real trend right now. Could even say there's a bit of a downtrend. Yeah, I'd say more than anything, there's a downtrend in Zim Integrated Shipping Services. So what's going on? Why does this company look so cheap? Well, obviously, yeah, the market's skeptical. And in this respect, I probably would listen to the market more than anything else. Otherwise, you could just trade it. If the share price or the chart is starting to move into an uptrend, if we see some positive sentiment, that's when you might drop in. Right now, there's nothing in the chart would make me even be interested in this company. Okay, so thank you for clarifying that, just Jim Cramer. And one of the reasons I've emphasized this particular comment is because I'm just sort of joking in saying that you think I have no sense of humor. And that will become important later on in the video because there's another comment from someone else who says the complete opposite. Okay. Really nice comment from Trader Hooper and a few replies as well. I won't go through all the replies, But Trade Hooper says, I feel that this channel is teaching us to fish. It seems that there are some commentators who just want to be given the fish, just on observation. And that's pretty obvious what he's talking about here, that some people just want other people to tell them what to do. Because in investing, that's the whole point of recommending sites like Motley Fool or broker reports, is you just want other people to tell you what to do, what to buy, and what to sell. The way I look at this channel is for me to empower you to make your own decisions. And if that works, if that has been happening, that is great, because when you're able to make your own decision when it comes to investing, I think that's wonderful. That is great. Now, also say that the government would not like that sort of thing. The government, how's the best way to say this? In my opinion, financial education should be mandatory in primary school and high school, and it's not. And a few years ago, some new person came to work with us, just out of university, that sort of thing. Science, very smart person. And this particular person had no idea what interest rates were. And that blew my mind. And it just shows you the lack of financial education in high school or even primary school when someone doesn't know what interest rates were. And there's a reason behind this. There's a reason why there is no financial education in school. And the main reason behind that is the government doesn't want us to be financial savvy. They want us to be completely different, to be completely opposite. Because if you have a look at the growth in the economy, a lot of the growth in the economy comes down to consumerism. The government wants us to buy, because that helps the economy. And because governments are very short-sighted, if we stop spending, that's going to affect their re-election possibilities. So they want us to buy to prop up the economy. And if we're financially savvy, a lot of us won't do that because we know how to live within our means. A lot of people don't know how to live within their means. And if we live within our means, we save and invest. That's not good for the current political party, because that could actually harm the economy in the short term. Delaying your purchasing actually does harm the economy in the short term. In the longer term, probably help the economy, but in the short term, and that's all the government cares about, getting re-elected. They only care about the short term. It's one of the reasons I don't think our political system is good. It's because the political parties are all obsessed about the short term. They don't care about the long-term future of this country at all. The only thing they care about is getting re-elected, getting back into power, or remaining in power. And that means they only care about the very short term. So in my opinion, and if I was running this company, financial education would be instituted in all schools around Australia. Health education will be implemented in all schools around Australia. And the reason behind that is just empowering people to make their own decisions when it comes to financials, and just teaching people how to budget and live within the means. And that would be very beneficial for the country in the long term. And just think of super. Whole reason we have super now. And if you think about super, it's your money and you have very little control of it. Well, some of us can, because there's ways around it. Not ways around it, but a lot of people have no control over their super. They just put, the employer puts money, a bit of their money into a super, and all they have to decide is whether to be more aggressive or more conservative. But back when super was implemented 30 years ago or something, the government went, "Oh crap, we're in trouble here, because eventually all these people are going to retire and there's going to be no money. We won't be able to fund all these people's retirement. So what we're going to do is force people to save for their retirement." And I just don't agree with that. And I do believe that if we have financial education in school, that superannuation would not be needed. Maybe I'm being a little bit too romantic, optimist. Maybe I'm being a little bit too optimistic about humans if they were given financial education. But anyway, thank you for that, Trader Hooper. I love this comment from CMNHL, and I really want to use this comment in the future. Mesoblast FDA approval was validation of its science. Today's announcement was a validation of its business. That was Mesoblast financial, their Appendix 4C, and we started to see increase in their revenue because they're selling they're selling their product. I always get, there's Ryan Seal and Remplia, and I always get it mixed up with Orthocell. Anyway, so that's Mesoblast. I love this comment. FDA approval, and I'll use this for other companies. FDA approval is validation of its science, and the Appendix 4C or half-year, full-year results, when it's really good numbers, that's validation of its business. It's great because I've always jumped in with FDA approval or even phase 3 trial results, but that's only validation of its science. It's not validation of its business. And I always love when I see a company, this was a good example of this, is Telix Pharmaceuticals. They already had validation of its science, but I jumped in and validation of its business when I saw the numbers. But a lot of times I will jump in validation of its science, either FDA approval or phase 3 results. So a great comment from CMNHL 1329. Apparently the numbers don't mean much. Apparently YouTube just gives you numbers. Chris and Caroline says, in regards to another biopharmaceutical company, or pharmaceutical company, how are you feeling about the recent move in Clarity? I'm interested to see if it can keep on going, as there is a lot of overhead supply and people who bought higher waiting to jump out. I sold at 350 on the way down and my break even at the last pump, and recently jumped back in at 280 for a long-term hold. I've definitely changed my thoughts on Clarity. I was hoping the share price could drop even more further than $1.50 because I'm a holder. And then it just, sentiment just shifted. That was a low. That would have been April 7. There was a nice little volume bump on the low. And yeah, sentiment shifted, trend has shifted. I think we had a moving average crossover on the 18th of July, but that was a little bit late. If I was trading this, the point I would have been really excited was that line there. So if you just zoom in a little bit more, we'll get rid of the moving average crossovers to make it a little bit more clearly. The reason I would have been excited if the share price, when the share price broke out of that line, which actually was around about the 2nd of July, the reason I would have been a little bit more excited about that is because the highs share price reached back in May was at level, and then it pulled back, and then it went above that level on the 2nd of July, and then a few days later, it actually tested that breakout, and it was a successful test. I'm not sure if that's the right wording, but the share price came back, tested it, and then started to go higher. In fact, it tested it, and then wowzers, look at that. And on those 2 days where it tested it, we had low volume, which is telling that there wasn't many people interested in selling at that point. And the share price has gone bonkers since then. So just technically, it was a beautiful play there, beautiful. And this technical analysis does work. You can actually see it just in this chart right here. At a nice little resistance level, share price popped up above it, tested it, and there she goes. So even though we've had a moving average crossover, which is a little bit, delayed, I would have been way more interested in trading this a few weeks earlier. And the chart looks really good. Share price at, what's that, a 5-month high? There would be a little bit of resistance moving forward because all these shareholders had bought higher prices. And the way to get around that would be some really positive news. That would be really good. So I wouldn't say any sort of uptrend now is going to be a really aggressive uptrend, sort of like Drone Shield. I don't expect that. That's a little bit too much hype. But I do expect that the downtrend has come to an end. The bottom has been reached, and I just wish it was a little bit lower. And yeah, there's me buying at 307. So I've gone on a nice little journey with this one. But I do like this chart. I do like this. I would expect the share price to pull back a little bit now, and then show more signs of an uptrend. Medical Investor says, Neppy, with all the recent moves in resource price and stocks, do you expect inflation to come back strongly? Would you consider locking in interest rates? No. Would I lock in interest rates? No, I know. Do I expect inflation to come back strongly? No, not really. I did actually do a little bit of research on this a few weeks ago, that in regards to tariffs, so there is a bit of a jump when it comes to tariffs and inflation, but I'm hoping most of the central banks in the world would know that any sort of jump in inflation probably is tariff related, and they should not increase interest rates. They should not. In fact, what they should do is actually decrease interest rates in that sort of situation. So let's hoping that that is what happens. But I do agree the Reserve Bank is being a little bit conservative with lowering interest rates, because the worst thing they could do right now, and this could happen in the United States if, say, Trump gets rid of Powell somehow, whoever gets put into that role would then be a Trumper, and they would lower interest rates, and that could be really negative for inflation. That could actually lead to a spike in inflation. That would be probably my biggest fear right now. Maybe not a fear, and that could lead to stagflation. So I don't expect inflation to come back strongly, and I wouldn't lock in interest rates. That was just me, although I cannot give financial advice. That's just my thoughts at this point in time. Vin Healy says, do you own AMD? No, I do not, on Nasdaq. It looks like it's bottom and the sky could be the limit. Well, to be technical, sky is the limit for all companies. Technically, the sky is the limit for all companies. It's just finding those companies that can reach their potential or their limit. Yeah, literally, sky is the limit for all companies. Well, actually, even further than the sky. Anyway, its A1 chips are second best to NVIDIA, but they are increasing market share, and there is a good chance it will run like NVIDIA did the last few years. Look for quarterly on August the 5th. So definitely AMD is on my watch lists. One of those companies that I've been looking at. There's quite a few companies in this space. So let's have a look at this company. And the chart does look much better now. Yeah, the share price has taken off. Yeah, the chart looks really good at this point in time. I do like this one. What's the market cap? I'd say it's 269.92 billion. P ratio 118.84, but that could be deceiving. If you just have a quick look at, say, the financials of this company, you're going to see something I will like here. Just go to the overview. Revenue growth has been spectacular. Earnings per share growth has gone backwards the last 3 years, but I expect that to rebound. Nice margins, operating margins 10.3%. I expect that to actually increase. For instance, NVIDIA's operating margins doesn't mean AMD will get up to the operating margins of NVIDIA, but NVIDIA's operating margins at 58%. So there is a bit of difference there. So I definitely would say NVIDIA is the higher quality of the two companies. And yeah, return equity, return invested capital, nice. So definitely a company on my radar. In fact, the forward-looking P ratio is only at 38.2. So they do expect some pretty significant growth for this company moving forward. This is the company's revenue growth. Yeah, it's there. So not quite as good as NVIDIA, but I think this company does have potential, as Vin Healy mentioned. Somewhere here. Okay. Bergwick says, what are your thoughts on Tuas? Down 13% last month. So this is a chart I haven't looked at for a while. I was trading Tuas, then I got out. So I'm going to just assume this is just a technical question, which makes it a lot easier for me. Tuas. So this is the old TPG guy, David. What's his name? David Tui. Yeah, so I was trading this. Beautiful trend for a long time. In fact, it was a beautiful trend. Beautiful breakout. This was back in March 2023. I don't know what happened. Not sure if there was a catalyst. We didn't see high volume, but that looked like a pretty nice breakout. And the share price then moved into an uptrend, a well-defined uptrend. I was trading this company through a lot of this period. And I got out on I'm not sure exactly which date, but the 26th of March, so not that long ago, 4 months ago, the share price dropped 7.5%. So was that on results? That could have been results. That sort of one-day candlestick is a negative, and the share price has been struggling since then. Definitely that trend has come to an end. So that is one thing I'm looking for. Any sort of signal which sort of signifies the end of an uptrend, and for me too is that it was that day. And since then, yeah, the chart, if anything, the share price is sort of moving into a downtrend. So chart does not look good. Chart does not look positive. So it comes back to whether or not you think this is a high-quality company. That's the way I look at it. Is Tuas a high-quality company? I probably would not be there at this point in time. It needs a little bit more proof. The reason I would say that is because the company is barely profitable, if profitable at all. Really nice revenue growth. That's one thing going for it, but barely profitable. No return on equity, no return on invested capital. So it needs a little bit more time to prove itself for me to call this company high quality, which means I'm more likely to trade it than own it for the long term. Okay, hopefully I've helped you with that. Bergwick. That's just me. That's my investing philosophy or trading philosophy. I just determine whether a company is high quality or not. And if it's high quality, try to own it for the long term. If it's not high quality, more likely to trade it. Fishball says, at the 30th minute of this video, and my memory is terrible, so I have no idea what you're talking about, except if you clarify. And that's exactly what Fishball has done. At the 30th minute of this video, you talk briefly on the trading strategy. Very interesting. You said you start with 5 charts you like, keep the ones you like, then sell out the crappy ones and use that money to buy other charts. Would love you to make a video on that, as it sounds like a strategy in this bull market. Well, that's what I do all the time. I look at all the charts, all the companies I'm trading, and I don't pick and choose. I don't say, well, I have these 30 trades and I'm going to sell out the worst looking ones. I don't do that, but I will actively trade out the charts that are not going in my favor. So I don't have a strategy where I look at 5 charts, keep the ones I like and sell out the crappy ones. But in a way, that is exactly what I do. But there's actually no strategy, if that makes sense. So for instance, let's go to look at some of my trades right now. So for instance, in fact, I'm going to talk about Stealth Group. And what I've done in my trading watch list and trading view is the oldest trades are at the top, which sort of makes sense. And then as I go through them, I sell out of the charts that it's starting to look pretty bad. And Stealth Group is at that point where I've taken profits with this one. I sold out half of my position because it looked like maybe it was getting a little bit toppy. And now it's starting to look like the trend has come to an end. I've got this orange line here, which is me to sell out of complete position. And it's right on that line. So Stealth Group, which is my longest trade right now. So bought, there it is, in almost 2 years ago. It's done well. It's gone up 4-fold from here. And I sold at a high price. Half of my shares at a higher price than where it is now. But this could be a sell very soon, just because trading. But if you keep going on, my second longest position is Shape Australia. There's no reason to even think about selling out this one. In fact, the share price went on a nice little run back in June. And since then, share price has gone sideways. I love that. Janus Plus, another one. This is my third longest hold. Bought this back in start of 2024. So 18 months. And there's no reason to be selling out of this one. Superloop. No reason to be selling out of this one at all. So I bought this at start of 2024, beautiful chart. And this is what I do. I just go through the charts. I look at the ones that, if they look good, there's no reason to sell. Catapult. Why would I even be thinking about selling out this one? I did take a little bit of profit when the share price rose a lot, but a little bit, not a lot. And the main reason I do that is, even though I'm not completely selling out, I'm just taking a little bit of profit just so I can buy some other companies that are trending nicely. Solvar, this one is interesting because the share price has gone up since I bought, but the returns on this one have been okay. I think it's gone up about 20%, but I would prefer 25%. But I do prefer my returns at a little bit higher than that. So even though the chart looks okay, the returns on this one have been and then we can keep on going down the list. So what I do every single week is I go through, and when I say every week, I actually mean a few times a week. I go through this list and I just look for charts that are looking a little bit dicey, that I should be paying more attention to. For example, Stealth Group. But for instance, Shape, Janus Plus, Superloop, Catapult, I only look at those charts maybe once a week on the weekend because there's no reason to be thinking about selling those companies on a day-to-day basis. So hopefully I've answered your question. If you had a question, reply to your comment. Trader says, I thought that sounded very much like the market indices. They can constantly getting rid of the non-performance, adding in performance. Yeah, actually, that is true. That is exactly what I'm doing. Yeah, I'm sort of like a market indice. I'm getting rid of my non-performance and just adding in performance. And it's complete opposite of what a lot of investors do. They sell their winners. And I saw this the other day. Someone was, I forget where. It could have been a Facebook group. Someone was just said, you can't go broke selling or taking profits. And I was like, no, that's the wrong advice. So what they're saying to people is sell out of your winners and keep hold of your losers. But I'm doing the complete opposite. I try to do the complete opposite. Keep holding your winners and then sell out of your losers. That is what I'm doing. And that is what indices do. They get rid of the non-performers and adding in performers. Makes sense to apply that to our own investment and trading strategies. I don't know if it's as easy as it sounds. I think it requires more discipline than most of us realize. Yeah, I do think that. I think psychology is very important here, because trying to take profits, it just feels good taking profits, but you need that discipline to maintain a holding in that. And then when you have a losing position, I think a lot of people find it hard to sell out of a losing position. I'm taking a loss, but that loss could get worse and worse. And Fishball says it would be good to see examples of these trades. Oh, I think I showed you that, sort of. Fishball, the news love bad news. How are earnings going backwards? Where is the proof? Just news making noise. This upward trend is strong. Quantitative easing is still happening in USA, Europe, Japan, all-time highs after all-time highs. Funnily enough, see, I heard that or read that somewhere that, what's happening? The market's going up, but earnings are going backwards. And I've seen a few other comments about this. In fact, there was a podcast. I'll try to remember who it was. There was a podcast, which I have not listened to yet. Yeah, here it is. It's a podcast is The Money Puzzle with James Kirby. And in the description of this particular podcast, the market's overheating. Records are being made on the ASX while profits are actually falling. So this is like the third time I've heard this or read this, that the ASX keeps on going up while profits are actually falling. But you're absolutely right. I'd like to see proof of this. Do we have actually data that profits are dropping? Anyway, so I like this comment from Fishball. I've just heard this now, but upward trend. Look at the XJO. It's a beautiful uptrend, beautiful breakout. And I actually did see that the other day on AusBusiness Core. Someone just mentioned, we just saw the market break out, and that's really positive. That's bullish. Anyway, so there's no point selling just because you think it's overvalued. The market is overvalued, because the market can remain, if you think the market is irrational, the market can remain irrational for a long period of time. Sensei says, thoughts on Total Energy Services, TOT. Let's have a look at a company I've never heard of. TOT, Total Energy Services. Here it is. Has 3 listings. Is also on the OTC in USA. Total Energy Services provides various products and services to the oil and natural gas industry. So I'd say this is cyclical, so like a mining services company. Canada, United States, and Australia. 4 segments: contract drilling, rental and transportation services, compression and process services, and well servicing. Sounds fairly similar to some Australian companies. We have quite a few drilling companies on the ASX. And talking about cyclical, I still remember in 2016, there was a drilling company, it was called Titan. I still remember this. And they were really bad. It was sort of the bottom of the cycle. Titan went bankrupt, and they were turned into a company called AuMake, which they transitioned from the bottom of the cycle into a company that was riding the Diageo trend. And then what happened in COVID-19? Well, that trend went bye-bye, and this company's share price just tanked. So if you actually have a look at this company, I'm sorry, going on a tangent, AuMake, we go back weekly. Yeah, so you'd see this company when the share price was really high in 2013-14. That is when it was called Titan Energy Services or something like that. The share price just collapsed. So the share price collapsed. It looks like it was 2014. Share price dropped 72% in 1 year. No, 1 week. Sorry, 1 week. And then, and then AuMake, if you have a look at the daily chart, just before COVID-19, I think this company was going places. Or maybe not. It's really hard to see. But anyway, I traded this company, AuMake, for about, it must have been like 2020 when I traded. I can't remember. It's too far back in the past. Anyway, in fact, I'm so intrigued in this tangent. I'm going to have a look at this company. So 0.2 cents. Woof, woof. Because on market index, you can actually go back through all their announcements. So if you go to, it's Titan. I was right, Titan Energy Services. So I'm pretty sure this was a drilling company, and they looked really good for a little bit. Like 2012, they looked really good. I had a look at it, and then they just went bust because of the bottom of the cycle. Anyway, so I think the whole point of me going down that particular tangent was saying this company is cyclical. Yeah, it's going to be cyclical. Okay, so whenever I first look at a company, high quality or not, straight away I think this company would be or should be considered low quality just because of that. Revenue growth, 24% in the last 3 years, 8.9% over the last 10 years. Earnings per share growth, 132.8% in the last 3 years, 2.1% over the last 10 years. So you can just see the difference in the earnings per share growth over the last 3 years compared to the last 10 years. This company has probably experienced some tailwinds recently. What else? Gross margins, operating margins, low. Operating margins, 8.7%. So straight away, I would have considered this company to be low quality. Operating margins fairly low. That's another sign. Return equity, return invested capital below 10%. That's a 5-year average. P ratio 6.8. So maybe there could be some value in this company. Dividend yield 3.9%. Pay ratio 22.2%. Okay, and I'm just going to have a look at the financial history of this company. And in fact, you can see this. You can see just the revenue going up and down, up and down. I think over time, maybe go up, but this is why I would consider this company more of a trading stock. You just take advantage of the trends or the cycle. Well, that's what I'm going to talk about when it comes to Total Energy Services, apart from the chart. By the way, I'm not deep diving into the company. Maybe they're doing something really interesting. Maybe there's branding out. They've got some growth initiatives. But if you have a look at the weekly chart for this company, definitely can see very cyclical. Share price went from $24 down to $2 between 2014 and 2020. And in fact, the weekly chart looks pretty good right now. It's a nice weekly uptrend. But definitely, in my opinion, this is not a company you own for the long term. That's just me. Global Wanderer Bruce says, EBR breaking out. Your interpretation, Neppy, please. Sure. Let's have a look at EBR. EBR Systems. We'll go to the daily chart. Every single weekend, I go through charts. Lots and lots of charts. And what I'm looking for is any sort of breakout. So I won't mention if this company is high quality. Well, it's definitely not high quality. Is it a story stock? Do they sell anything? I have no idea. I have heard of this company in the past. A fair bit of volatility recently. We saw a really interesting breakout on the 3rd of January. That breakout did lead the share price rising, but then the share price dropped. What caused that? I don't know. And it looks like the share price is starting to turn positive again. I do like how the share price drops, finds a little bit of a base, and starts rising again. So it does look like the share price is trying to break out. Now, there will be a little bit of resistance moving forward because there would be shareholders who bought at higher prices. The other thing is when the share price dropped, there was pretty big volume coming through that area. So maybe quite a few shareholders did sell out when the share price dropped. There was one day here, the share price dropped 17%, 14th of April. Okay, I'm not going to try to figure out what happened there, but it does look like that sort of negative sentiment is starting to shift, more positive. Trend is starting to go up. Share price went up 7% on 21st of July, and then the share price just went sideways the rest of the week, which is actually a good thing. So I don't mind this chart for EBR Systems. And I have a feeling this company has a fairly high market cap. Yeah, $505 million. And according to TradingView, they have no revenue. So story stock, which doesn't matter. Doesn't matter if you're just trading it at all. Ben Hutchinson's buying some DGL. Am I crazy? Not me. Is he crazy? I've got a feeling I'll be glad I did. So I used to own DGL, not anymore. This is one of those situations where I'd rather just be trading it. Maybe there's some value with DGL. That's what I was thinking to myself. So let's just have a look at the chart first of all, and then we'll just go into some of the financial metrics. Yeah, the chart, you definitely would not be trading this. So a few times looked like the chart was breaking out, and then it just fell away. They released their numbers in February were disappointing. Share price dropped. That was sort of the catalyst for the share price continuing into a downtrend. 40 cents. Market cap 112.66 million. P ratio 18. I do think once you get a bit of a sign that the company might be turning around, I think there's plenty of upside possible for this company. There's a possible 10-bagger here. Possible. You might have to be patient. So I think Ben Hutchinson might have to be patient. But if their results in August look pretty good, I might be interested in this one. So just because I've sold out in the past doesn't mean that precludes me from buying back in. So financials, we'll go the overview first. Revenue growth has been really nice. It's just a squeeze in the margins, if I remember correctly. Margins, or operating margins of 5%, that's pretty low. And I have a feeling it's just been the margins have been the problem for this company. Let's have a look. Because if you look at the revenue growth has been okay. And let's have a look at operating margins. Has this dropped a lot? Yeah, in fact, operating margins were rising up until 13% in 2022, and they've been dropping the last few years. In fact, they've gone from 12.9% down to 5%. In fact, to look even more impressive if we get rid of these two. Yeah, so margins have dropped the last few years. So are we at the bottom in the margins? Are we? And that's actually could be a good thing to look at in the full year results, is if margins are starting to go up again, that could be a good sign. That could be the time to jump in. There you go. You could be crazy, but there could be some value. John Doe, Alcoa, is it too early for an uptrend? AAI, so this is a technical question. AAI, Alcoa, is this? I don't know much about Alcoa. Okay, so I don't know much about Alcoa. I'm just looking at this chart. This is close. I don't mind this chart. I don't mind this chart at all. So I was just by the way we have these candlesticks, I just assumed this was listed in United States. Oh, you know what I should do? Instead of the T code, I should do this. Alcoa. And I've got to spell it right. Yeah, there it is. It's listed. Yeah, it's Alcoa Corporation AA, New York Stock Exchange. That makes sense to me. So this should be like a mirror image. Yeah, it is. Instead of the lumpiness we see, that Alcoa AII chart was a chart of a company that is listed on the New York Stock Exchange or International Exchange, because the share price will move up or down based off what happened on the New York Stock Exchange. So I do like this chart better than the one on the Australia, but you got to get a similar sort of thing. They're sort of like a mirror image of each. Not the mirror image. They're like, it's the same chart, almost. Anyway, so I did like what I saw on the Australian one, and you got a very, very similar. There's a bit of an uptrend up the right there. Look at that uptrend. We've had moving average crossover. Share price got to $32, has pulled back the last few days, which is what you want. Share price at $32 is a 3-month high, almost a 4-month high. So yeah, this chart doesn't look that bad. I don't mind this chart. So again, I'll probably say this is more of a trading stock. P ratio 8.19, dividend yield 1.25%. Yeah, I wouldn't say it. I think it's definitely in an uptrend. By the way, it's definitely an uptrend. I would call this a short-term uptrend. I do prefer medium to long-term uptrends, but this or medium or end long-term uptrends start off as short-term uptrends. So Alcoa Corporation is in a short-term uptrend. Fishball just got into Spark New Zealand, chart starting to turn around. Also, Verizon Communications did pretty well in USA last night. Not that they correlate. So I'm also trading Spark. And I do think even on top of the chart starting to look a little bit more interesting, that there could be some value in this one. So the chart does look interesting. I like it. We had a little bit of a pullback the last week or bit, but that's healthy. We always want to see a bit of a pullback. Now we want to see the share price go up again. We don't want to see this pullback continuing. And the other one was Verizon. Isn't this a telecommunications company? Verizon, no, they own Verizon. I can hear their commercial in the back of my mind. Verizon, yes, but what they do, maybe not internet. What do you call it? TV stuff like that. Wireless, broadband, data, video conferencing. Okay. I'm just looking at the chart for this one. The chart does nothing for me. Share price did pop up on the 21st, 4%, but the trend for this, for me, the trend or the chart is a big meh. What about weekly? Weekly, I'm going to put the 200-week moving average. Nah. P ratio 10, dividend yield 6.29%, which is quite high for an American listed company. So maybe some value this one. Maybe. I'm going to have a closer look at Verizon. Verizon. I might do a standalone video. Thank you for that, Fishball. Trader Hooper says VR8. VR8. I did a video on VR8. Well, not a video, but I did mention Vanadium Resources. And Trader Hooper is just mentioning that their first agreement was just an MOU, Memorandum of Understanding, whereas the agreement the other day was a binding agreement. So many offtakes agreements are just MOUs, which I think is why they seem to go nowhere. Yes, so I did not realize that. But if that agreement was binding, it does make it a little bit more powerful. And good explanation from Trader Hooper. Let's have a look at the chart for Vanadium Resources. So share price went up, what was that, 78% on Tuesday. And did they do a capital raising? Because then the share price dropped 12.2%. Did they do capital raising? Let's have a look. VR8. VR8. Trading halt. Oh, yes. So they did a placement. There you go. And the share price drop. I don't mind. When you see the share price rise like this, I don't mind the share price drops the next day. You see that a lot. Not all the time, but you see that a lot. And sometimes you'll see the share price keep on dropping, but sometimes that's the time to buy. The question is, which is which? Okay, so thank you for that, Trader Hooper. Some clarification. And there's Karen Shing says, love your sense of humor. Put that up, you just Jim Cramer, who says, I have no sense of humor. I'm only joking. Someone does say I have a great sense of humor. But maybe sometimes your sense of humor just goes over my head. Thank you for that, Karen. You're the best. You are the best. Stu Percy says, if you ask ChatGPT, GTP, why shareholders are not happy with the board and the decisions, it's quite interesting. I was like, what are you talking about here? I think you're talking about, oh, geez, I knew you're talking about Betmakers, I think. Betmakers. So I'm going to open up ChatGPT. I think it's Betmakers. because there was a couple of comments about Betmakers there. And what I'm going to do, why are shareholders not happy with the board and decisions? Betmakers. Betmakers. Let's see what ChatGPT. Yeah, anyway. Key reasons for shareholder dissatisfaction: heavy investments yielding negative returns, board and management restructuring. So apparently Betmakers shareholders have been increasingly critical of the board. Capital raising and share dilution concerns, lack of dividends and weak cash flow. Well, okay. Monetary shareholder rights and governance tensions. Yeah, anyway, so I have no idea why I included this comment, but I suppose using ChatGPT to answer some of your questions. Now, don't always consider ChatGPT to be 100% accurate, because it's not. It's not. But thank you for that, Stu Percy. I don't really follow Betmakers all that closely, but there was a few comments about shareholders not being happy. Dan Bag says, hi, Neppy, curious as to your thoughts on royalty companies. Do you know of any on the ASX? There is an ETF ROYL that gives exposure to global companies. As soon as I saw this comment, my first thoughts were Deterra. And then Bun Hutchinson says Deterra royalties is one I hold more as stable portfolio ballast and then for capital growth. And I also own Deterra because I do think it's good value. So that's the only one I can think of. I think there's a few other small ones, and I can't think of the names right now, really small, but Deterra is the only one I can think of right now. There might be a few others, but that's the only one. And ETF ROYL. I'm going to have a quick look at ETF ROYL. ROYL. BetShares Global Royalties ETF. And you can have a look at the holdings. Universal Music Store. Music Group. There you go. I did not think that was going to be in it, which sort of makes sense. ARM Holdings or ARM Holdings, Wheaton Precious Metals, Franco Nevada, Texas Pacific Land, Genmab, Royal Gold, Royalty Pharma, Halozyme Therapeutics, Inter Digital, Universal Music Group. There you go. And let's have a look at the chart for ROYL. It's really interesting because I would not even thought there was an ETF like this, but there you go. And the chart looks pretty good. This is the weekly chart. The chart doesn't look half bad. There you go. No, it's only been around for a while, since 2022. And Deterra, let's have a look at Deterra. So the reason I got into Deterra is a year ago, the share price dropped a lot. And the reason it dropped is because the company decided just to change their dividend policy. So they went minimum 50%, and the market was not happy with that. But the way I looked at it is that's a minimum. More than likely, most years are going to have 100% or close to 100%. And the share price moved into my purple box. And for me, that purple box was a good buying opportunity for Deterra. What I should have done was the bottom of the box was a good, really good buying, but I bought as soon as it moved into the purple box, and I should have just been patient. Now, in saying that, I'm getting a nice little dividend from it, 5.5%, and the share price is now higher than when I bought. So I wouldn't say Deterra is stable portfolio ballast, but yeah, I thought it was cheap and you get a nice little dividend from it. And I don't mind that. I don't mind cheap, nice dividend, because if you're getting it cheap and you get a nice dividend, if the share price goes up a fair bit, you can actually take a capital profit as well. Ben Hutchinson says, I think Lindian Resources, a company I've never heard of before, is a great under-the-radar stock. There you go. Never heard of it before, and it's great under the radar. Building a major rare earths mine in Malawi. Deposit is larger than Linus, although half the grade. Very hard-working team, making rapid progress both in financing at the main mine site. Heavy insider ownership and recent on-market buying. I hold. Keep in mind, I'm a fundamental value investor more than technicals. Now might be comparable to buying West African Resources in 2018-19. I forget when I bought West African, but I've held that company for a long time, and I just thought it was cheap. But I did buy West African after they started selling gold. So it would have been about 3 months after they started selling gold. Lindian Resources. So this is the first time I ever looked at this company. Now, again, I would call this For me, this might be a story stock, although they're doing a share buyback, which, let's have a look. Let's have a look at the most recent Appendix 4C. Now, what Ben mentions here, he knows this. It seems like he knows this company way more than what I could discern in this video. So this is very important. I think a very important point. What's the saying? Like, he's going to be more, not convinced, but his conviction on this company seems like it's quite high. He's like done the research. He's looked at this company's management. He says that they're very hardworking team, making rapid progress in financing, heavy insider ownership. So he does know this company quite well. So he can point out all the reasons why he likes this company, but it's very hard for him to transfer his conviction to us. It's really hard. So I think in this sort of situation, it's very important to do your own research. And I think that's very important for all things, but particularly in these sort of situations. And also to understand that it's very hard to shift your conviction onto other people, particularly if it's fairly high. If it's fairly high. And anyway, so I'm assuming this company is still a story stock, but okay. And in their highlights, now this is old, so they should be releasing their next quarterly update soon. Key construction site works commence, strengthened leadership position with key appointments, test work for offtake and strategic investment process underway with the Australian Nuclear Science and Technology Organisation, site and construction development, and it's rarer, or bauxite as well. It's a bit of bauxite. So as you can see, I don't know this company at all. And I would say that Ben Hutchinson knows this company significantly more than I do. So I cannot give this company any sort of justice. So all I'm going to do is just have a look at the chart. Lindian Resources. Another good thing about this channel is you give me a lot of ideas. And I've bought some companies just on the back of your ideas. Okay, so if I was just looking at the chart and that's it, I'd be going there. Now, one thing I do like, it's a very subtle thing. You can see the share price popping up here. It looks like it's moving into an uptrend. There was some good volume. We saw some subtle increases of volume. And then the share price, we saw some more volume coming in, high volume coming in at the low as well. That's a good sign. Now, when the share price dropped, there was very little volume. And now you can see the subtle increase in volume just by looking at the weekly chart. Yeah, just a weekly chart. You can see before March of this year, very low volume. The share price was doing nothing. And this is very important because you do need interest in the market for the share price to go up. You need the market to be a little bit interested. And when the market is not interested, the share price will just flounder and just sort of drift lower. And we saw that with Lindian between the start of 2024. Well, through 2024, share price just drifted lower on very little volume. And then we started to see some more volume coming in, and we started to see the share price maybe gaining a little bit of momentum. So volume is really important, and interest in the market is important. But thank you for that, Ben Hutchinson. I'm going to write down Lindian. Keep on. Actually, what I will do is put this into one of my watch lists. But which watch list? Because I don't have a mining exploring watch list. I just have a small cap, like a small producing miner. I could put this into my mining. I'll just put it into my mining. I have a mining big and just a mining. So that's all the other miners. Okay, Kapow says, from your experience, do share prices usually rise after a company releases Appendix 4C? I'm wondering if Bioxin might also move up after Monday. And K23 man says, it can go either way depending on whether market likes the results or is disappointed. And K23 man is absolutely right. Sometimes you'll see the share price go significantly higher. Sometimes it will drop. It all depends on what the market is expecting and whether the the results are good or not. So 50-50. So it all depends. It all depends. And for example, we saw was it Thursday, quite a few good movements in company share price. Which companies were those? I forget. In fact, I can tell you because I write it down. So let's have a look. RLF went up 19.3%. We had Alcidion. Ooh. In fact, Alcidion was up like 20%. It's pulled back. Not surprised with that one. Bioxin went up 10% maybe. Big volume. Bioxin had really big volume as well. That's another good sign. And EPX went up a fair bit, 22.7%. And then bigger volume on the Friday. That's interesting. And we also have Farm Pride Food. Share price went up. Oh, it went down. There you go. So there's it could go up or down. Happy Now says, thanks. Oh, okay. This is the bank video. So I have put this into my possible bank videos. I said possible because I have a lot of possibilities there. But for a future bank video, could you do something on how you manage the emotion with good and disaster investment decisions? And I do have an answer to that one. It all comes back to plans, having a plan. I think that really helps. Just Jim Cramer, Redox, and AZJ, which is Aurizon, trending nicely. And there was a few comments after this one. Aurizon much better than the other one, but Aurizon at a 10-year low for a reason. Very low cash flow. So let's have a look at the charts for both of these because this is technical. So I'm not going to look at the company itself. So we'll start off with Aurizon. I am trading this one, by the way. I am trading this one now. This could be a disaster. But for me, the share price broke out of a long-term downtrend. Almost an 18-month downtrend. It broke out at the start of July. I need a little bit more proof, but I do like this chart. Whether the share price goes up much further from here remains to be seen. I'm a little bit skeptical about this one. So this is definitely one chart where I could see it going flat and not doing much from here. But I think the upside is fairly good. If you go through the history of this company, the share price has bounced off a long-term low, like a 10-year low. So possibly a 100 bagger, not a 100 bagger, possibly up 100% at the best. At the best. And the other one was Redox. Another one I was trading in the past and I got out. Have a look at the daily chart. Got out. It was a nice uptrend, and I got out on the 20th of February, last results. And this was another no-brainer. Just get out. Just get out. Share price dropped 21% on that day, and share price has dropped significantly further from there. And this is one of my rules. So plans, rules, have a rule. When I say this sort of thing, get out. Now, sometimes the share price will bounce, but sometimes, a lot of times, you'll see the share price do exactly what we have seen with Redox. Share price has just continued to drop. Now, the share price has maybe found a bit of a floor and maybe moving or trying to move into an uptrend, maybe. I wouldn't go there just yet because the share price did drop a fair bit back in early June, not sure what happened there. And this could be just a little bit of a rise or rally because of that pretty big drop. So not there yet with Redox. Sensei says, if Australia introduces a 4-day work week, is this being talked about? I have no idea. Very soon. Does that mean the ASX will be closed Thursday, 4 p.m. to Monday, 10 a.m.? Now, in saying that, we've heard before, in fact, I might ask ChatGPT. I saw that London Stock Exchange were talking about opening up full time. Maybe not 24/7, 365, but we've also heard this from the Americans saying we should open up our equity markets much longer than we're doing now. And I think one of the reasons behind that is because cryptocurrency, they're open all the time. You can trade. If you've got Bitcoin, you can trade it on a public holiday if you really, really want to. Talk of Share markets opening up longer hours. Who and why? Let's see what ChatGPT has to say about this. Many stock exchanges and broker platforms are now considering or launching extended trading hours, including moves towards what's sometimes called 24-hour, actually 24 times 5 trading. Here's a breakdown of who's doing what and why. USA. So New York Stock Exchange, 22 hours per weekday. I've heard this, yes. Nasdaq has also applied to regulators to support much longer hours, aiming for nearly around-the-clock operations in the US market. These moves aim to satisfy growing global demand, especially from Asia-Pacific retail investors, tapping US shares outside typical Eastern time hours, and to stay competitive with crypto and foreign exchange markets that already trade all day. And then it goes through some brokers. And there's the US, the London. London actively exploring 24 or extended trading hours past its current 8 a.m. to 4:30 p.m. to boost competitiveness with US exchanges and retain high growth domestic listings. There you go. So if I didn't know all that, I'd be concerned because 3 days without the stock market open is just not good enough. Not good enough. So anyway, so don't give me fears, Sensei. Hutchison's traded West Coast silver last few days, was looking for a longer-term investment. Day trading isn't my jam. Day trading is my jam either, but I actually am in West Coast silver. But I think it's run too fast, and I'm concerned about the dilution in this stock. Okay, so I don't like day trading. I've already tried day trading, but when I say day trading, I'm talking about really short-term. Like I did this with Zip many years ago. And just for one day, I was like, oh, can I day trade? It actually was successful, but it was just, I did not like being in front of my screen all day. I like doing things. I have ADD. I like doing things. ADHD, whatever it's called. I like just doing things. Like I might watch TV for like 30 minutes, then I might go for a walk, then I might read a book, might play a video game. When I say video game, I mean on my phone, just like Wordle or something. Then I might do other things. I don't like sitting down and doing something for extended periods. And I found that on this day, I was just in front of my screen. I hated it. And also it's stressful as well. With West Coast Silver, I liked their announcement and the share price popped up, broke above 10 cents, and that was all I needed. That's all I needed. And we've seen like these spikes in volume. It's a really good sign, these massive increases in volume. Now, I don't necessarily like what I see on this chart. So there's a chance I might take profits. So I bought in at 10 cents. Yeah, bought in at 10 cents. And will I take profits? I'm very close to taking profits like Ben Hutchison is doing. I'm surprised they did a capital raising. I'm surprised the share price didn't drop. I saw this capital raising and I went, oh, the share price is going to drop now. I should have taken profits. And the share price has gone the opposite direction. Yeah, the share price went up. So I'm a little bit concerned about that as well. So I'm sort of in the camp of Ben Hutchison, don't like day trading. And yeah, I think the share price could go either way from here. But I do like this chart, by the way. I just don't like how the share price has just gone up so rapidly. But their announcement was so good. I like their announcement. And the other thing I did, I was surprised how the reaction from the market was as subdued. I thought it should have been a bigger reaction. And we've seen maybe the follow-up reaction. I don't know. Okay, Stealth Group, Ben Hutchison. The air has been quietly leaking out Stealth Group price lately at support or a change of trend. Okay, so now I can talk about Stealth Group. I knew there was a question coming up. So Stealth Group, very close to selling out this one completely. So I took profits somewhere in April, I think. I forget exactly where. One of the reasons I think I took profits is before February, it was really well behaved. You didn't see a lot of volatility. Share price went up, rallied, then went sideways, rallied, went sideways, rallied, sideways, rallied, sideways. And you can see these spikes in volume on the rallies. And then all of a sudden, there was just so much volatility and there wasn't these spikes in volume anymore. So share price would go up and down like nothing else, like up 20% in a day, and then down 14% in a day, then up 11%, down 15%. I don't like that. I don't know what that means, why there was so much volatility. Maybe that's a sign the share price is getting to a peak. I don't know. But the share price was still rising. And then we got to the end of May, and the next high was lower than the previous high. That was the first sign the uptrend was coming to an end, and we're, if anything, starting to see signs of a short-term downtrend. Put the line there, short-term downtrend, and the share price is at my sell level. Might completely get out of this one. We're also very close to getting a moving average crossover as well. So yeah, I very close to selling out of Stealth Group. And I would say the chance there is a change of trend. Now, all they need to do is release some really good results in August, and that could change everything. VBEd says, talking about how retail stocks are reporting, or any retail stocks who report lower sales, share price will drop. Babcock, 28.38%. Watch out, Super Retail Group, Harvey Norman, Accent Group. I even think Accent Group release a negative trading update. The Visa, Universal Brands, JB Hi-Fi, and others. Today, I was talking to someone who works at Dan Murphy's. She told me that they are currently laying off staff. That was enough for me to get spooked and to dump my Endeavour stocks today. In August, when companies start reporting, it will be bloodbath for retailers. It might be a good buying opportunity. Get out of consumer cyclical stocks now. This is VBEd. I have no problem with that. Yeah. So we have seen a few negative updates, and interesting. Some of the charts for these companies actually looking pretty good. I had a look at Harvey Norman the other day, and I was surprised how good this chart looked. It's like, wow, why? I think it was Harvey Norman, yeah. It's like, why? Why is there so much interest in Harvey Norman? And the other thing is, if you have a look at some of these companies, like JB Hi-Fi is richly valued. I think it's a high-quality company, but it's richly valued. Anyway, so I do own La Visa, but that's a long-term hold. I've held that for a while. I'll maintain a holding for that. And the main reason behind that is the global expansion. But other than that, I have no interest. Endeavour is on my watch lists. Share price has dropped a lot. But whenever Endeavour Group share price or chart looks interesting, nothing really happens. So it looked interesting back. It looked like, oh, it's going to go up into an uptrend in July last year. And then when they released results on 26th of August, share price dropped to 6.8%. And that was a trend killer. And the share price has dropped significantly since then. And by the way, this chart over the long term looks terrible. Still remember when this was spun out of Woolworths, so many people were so high on Endeavour. And the share price has halved since then. And these people were experts. It's defensive. It's so good, it's defensive. Well, share price has halved. So thank you for that, VBEd. And it's really good to actually get some insight into people who are working at some of these stores, like Dan Murphy's, laying off staff. People aren't buying alcohol. I thought that was defensive. Hence, Endeavour. DG Home and Garden. Northern Star Minerals reported today. Stock went down for a couple of percent. Looked good to me. Would love to hear your thoughts. Thanks, DG Means Garden. Oh, DG Mean. I was thinking you meant DG Means Garden, but that's your name. DG, wait there. DG Home and Garden. DG Mean Garden. Okay. Northern Star did this enter my Northern Star? Oh, yes. On the July 24 is one of the T codes that I did put down, but I did not circle it, which means I was like, meh, wasn't fantastic or terrible. Typically with these sort of announcements, activities report. So I do open up all these, but what I'm looking for is any sign whether the results were better or worse than expected. So typically a company would say, and I can't remember if Northern Star did this, but typically a company will say, these are our numbers for the quarter, even for the year, and they're a little bit below expectations, or they're within our guidance range. Let's see what Northern Star said. I can't remember at this point in time. In fact, they say here, financial year 25 gold sold at 1,634,000 ounces at all-in sustaining costs of 2,163 within revised group guidance range. Now, I'm not sure what their range is, but that could be the middle range. It could be slightly below the middle range. And if it's slightly below the middle range, I would say that's a slight miss. If it's slightly above the middle range, I would say that's a slight hit, slightly better than expected. Now, even though there's a range, that's the way I look at it. They also put out financial year 26 outlook, so production guidance. So they are expecting to increase gold sold, but all-in sustaining costs are expected to increase. So increasing gold, but increasing all-in sustaining costs. So, yeah. They also provided growth capital guidance. That's a fair bit. Is that a fair bit? Like $2 billion? Okay, so I had no thoughts about this when I first saw it, but they were within group guidance range. And when these sort of things happen, I just have a look at the market reaction. And there was a slightly negative reaction, maybe just slightly negative, but that's all I can say. And let's have a look at the chart. Didn't they release? Yeah, they did release. If I remember correctly, they did release operational update. And I think the share price did drop on that operational update on the 7th of July. Let me just verify that. Yeah, the share price did drop on that. So that was the important announcement. Share price dropped 9% on that day. And if you have a look at this chart, this is actually quite a negative chart at this point in time. Share price has dropped from $23 down to $16. So gold prices haven't fallen away. So it does seem like there's a little bit negative sentiment in Northern Star right now. Right now, at this point in time. That could change fairly quickly. Also, look at the subtle increase in volume as well. Anyway. Okay. Motivational Flavio says, what do you think about Guzman? I love their burritos. It's down 38% from its all-time high. Pee-wee says, I hear they are priced for perfection, especially in California. And Roger Dawn says, still overpriced. Gomez, this is another case. I'll just have a look at the chart, by the way. This is another case of a trend killer event. Share price in uptrend, trend killer event when they released results in February. Share price dropped 14% on that day. It then dropped another 7% the next day. That's a trend killer. So if I was trading this, I would have got out straight away. That's my rules. And look at what's happened with the chart. Share price has dropped a lot. It's moving back down to where it started. I've always thought this was overvalued, and I would say the same. Let's just have a look at. They're trying to expand overseas, and how successful they expand overseas is going to be vitally important. Revenue's growing, that's nice, but barely profitable. In fact, I think they've been loss-making. Yeah, there you go. They were profitable by $7 million in the last half year. So I find it very hard to value these sort of companies that are growing nicely, but they've just got into profitability, because when you do it like a DCF, you could put in a wide range of numbers and get a completely different valuation for Guzman. So for me, I need a little more proof about this company, and that means I'm just having a look at the chart, and for me, the chart is a no-go. I'm interested in this Pee-wee. Here they are priced for perfection, especially in California. Have Guzman gone into California? Or is that just like their burrito? I don't know. Just Jim Kramer, looking at price charts, how far back should we go? PPT peaked in 2007. Is it even worth considering that? Hey, this is actually a pretty good question, isn't it? How far should we go? And the way I look at it is the further back it is, the less powerful it is. But sometimes all-time highs or all-time lows people will remember it. So Perpetual, I have a feeling this chart is going to look awful. Yep. So the all-time highs were back in 2007. So people would know that. $84. All-time high for perpetual. And if you see the share price getting back up to $84, that would be a bit of a resistance, just because people go, oh, it's $84. That's the all-time high. And that is also why I put this dashed line at the lows for perpetual back in 2011. I thought that could be a nice little support level. And it was. Share price bounced off that level in the COVID-19. And I was thinking, ooh, will the share price bounce? It sort of did, but the downtrend is just too powerful. So this is a weekly downtrend. And it looks like the 100-day week moving average is a fairly powerful resistance level for perpetual. But the question becomes, how relevant is that? What I might do, the sort of what just Jim Cramer is saying, how far back should we go? I'm going to do a ChatGPT. Technical analysis. How relevant is long-term lows and highs? Say 20 years. Let's see what ChatGPT can say here. In fact, they say, ChatGPT says, long-term highs and lows, 20-year highs and lows can be very relevant. I'm not sure it would have gone that far, but their importance depends on context, including the time horizon of the trader or investor. Here's a breakdown. Psychological significance. Major highs and lows often serve as psychological landmarks for market participants. I think I was mentioning that. 20-year high may act as a resistance level simply because it's uncharted territory. Investors may hesitate or take profits. 20-year low may act as a support level to perceived value. Supply and demand memory. Prices at long-term highs and lows may coincide with institutional memory, places where big players previously entered or exit the market. These zones can trigger renewed interest or caution. Okay. I wouldn't say it's important, but it's not very important. It's not very relevant. Anyway, I would consider it though, but I don't think it's as relevant as if it was like 2 or 3 years ago. At C, ZGL is worth a look. Very low $30 million market cap, but with significant profitability, currently at 4-ish P ratio is a bargain. Chart is looking amazing as well. ZGL. Let's have a look at ZGL. Zycom. What do they do? They don't release Appendix 4Cs. So that's one of the reasons why I don't know much about this company. So let's have a look at the most recent half-year results. Profit guidance. Zycom. Oh, I know exactly why I don't follow this company. They report in Singapore dollars or Singapore currency, whatever currency that is in. I'm assuming that's what the S is. Yes, Singapore dollars. They report in Singapore. That is interesting because a lot of times when I see a company reporting in a foreign currency, if it's American dollars, I will look at it. New Zealand dollars, I will look at it. Euros, I will look at it. But when it comes to many other currencies, I don't look. And the main reason is exchange rates. Like American dollars, I can easily do exchange rates. And even New Zealand dollars, it's not that much difference. Euro is fine. But when it comes to these more obscure currencies, $71 million in Singapore dollars in revenue in 2024, I don't know what that is in Australia. I just can't. It doesn't. I have no. Don't have any grasp of that. So I typically ignore these type of companies. There you go. That's a simple reason I do it. So what do they do? Review of operations. A lot of times you'll see what they do. Green energy, gas and marine equipment, construction equipment. So it looks like they do mining services, that sort of thing. Precision engineering and technologies. I'm just going to have a look at their financials without trying to convert to Australian dollars. So revenue, nice increase. They were profitable in the last year, but they were unprofitable the previous year. What I might actually do is just go to FinChat, ZGL, Zycom. Is it Zycom? According to FinChat or Fiscal AI, manufacture and sell marine deck machinery, fluid regulating and metering stations, transit concrete mixers, and geotechnical equipment in Singapore. I'm assuming they're not selling this in Singapore, but they're out of Singapore. Market cap is 25.75 million. They do have a bit of debt. They do have a little bit of debt, which means enterprise value is $71 million. P ratio is 1.8. Nice revenue growth, by the way, over the last 3 and 5 years. Return equity, return invested capital negative. Margins are fairly low. Operating margins 4.2%. Financials, total revenue. Yeah, it's not much growth over the last 10 years. Over the last few years, there is a bit of growth, but before that, not much growth. And I'd say the income, yeah, it can be profitable, but most of the years they are actually unprofitable. So that's probably one of the reasons why the market is just sort of ignoring the profit at this point in time. In fact, if you look at the last half year, yeah, so the last half year, they only had $2.6 million in profit. The previous to that, there was 9.4. So that could be a one-off. In fact, we can see if that's a one-off just by looking at the numbers here. So they had $9.4 million in profit. Oh, this is why. Okay, so this is very important. I've mentioned this in the past. Sometimes this company will sell something like property and they'll have a one-off gain. And this is exactly what Zycom did in that particular half year. They sold something and there was a gain loss on sale of assets. So they might have sold property, sold something, and there was a gain on that. It's a one-off, 8.3. So you have to take that into account. So their profit in that particular year was not as great, and that is why they have a low P ratio. So this is very important. Yeah, so if you have a look at the full year numbers, is that right? If you have a look at the full year numbers, that profit was influenced by that one-off. So yeah, that's it. That's the reason why. So totally ignore that P ratio, in my opinion. Let's have a little chart, however. Okay, let's go trading. Ooh, the chart. The chart over the last few weeks, looks really interesting, doesn't it? Share price looks like it's broken out. It does look like it's illiquidly traded, and we can confirm that. Trade history. It's not as illiquidly traded. Nice little rise in share price, but on low volume on the 18th of July. Let's see if they announced anything. They didn't. Anyway, so just be wary when you see that sort of P ratio on the sale of an asset. They did get a one-off profit. Sideburn says, hey, Nappy, love your quarterly tracking spreadsheet. Do you manually enter all this data or is it automatic? Yes, I manually do it all. Been doing manually for 12 or 13 years. Would you be willing to share? It's maybe something I could do, I suppose, in the future. Yes, I could share it, maybe. I don't know. Forest Hill, can you please look at Fleet Partners? Price dipping, but outlook is positive. They've been buying back shares and there might be 2 PE firms interested in acquiring. Fleet Partners did enter my watch list arena not that long ago. I equate, maybe not compare, but I put 3 companies into the same bin. It used to be 4 because SG Fleet got bought out. But I am trading Macmillan Shakespeare because the share price sort of broke out. Smart Group. I looked at this chart. This chart looks like it's still in a bit of a downtrend. And Fleet Partners chart was showing a little bit of promise a few weeks ago. I thought, oh, this looks okay. And then all of a sudden the share price dropped 8% on Wednesday. I was like, what's happening here? What's happening? Why did Fleet Partners share price just drop a lot? So there was a trading update on the 23rd. In fact, did I put this? Fleet Partners was not in my top 5 on that day, but I did circle it. So typically, if I circle the T code on a day, that means I think the share price might move up or down. In this case, down. So obviously, there was something in this trading update I did not like, and the market did not like, and that is why the share price dropped 8%. I won't look at it now because I'm getting stretched for time, and that is why the share price dropped. So this could be a bit of a trend killer event. There you go. That's what I'm going to say about Fleet Partners at this point in time. I do find it interesting. You also mentioned there could be 2 private equity firms interested in acquiring them. And I think these companies are cheap, or they all look cheap. So McMillan Shakespeare was definitely cheap. P ratio of Fleet Partners is 8.74. If you go to McMillan Shakespeare, it's one of the reasons why I'm willing to trade these, because you could get a nice capital return plus might get a nice little dividend on top of that. Dividend yield 8.52%, P ratio 13.5 for McMillan Shakespeare, and Smart Group. Dividend yield 6.22% and P ratio 13.44. The only thing you have to be wary about these companies is there are any sort of change in government regulations, but I think the chance of that is fairly low. Just Jim Kramer says, too late to jump into Neuren. No, I'm trading Neuren too. So I own Neuren for the long term, and I'm trading it now. And I'm happy I traded because the share price popped up 9% on Thursday. So I got in before that. So this is a case where I own a company for the long term, and then I saw a trading position or trading opportunity. I went, yeah, let's just trade Neuren. So I am trading Neuren Pharmaceuticals right now. Is it too late? I would have said before Thursday. Well, it's a tricky one. I would say no, but the share price might pull back a little bit. You might get in a better price, but if the share price goes sideways the next few days after that nice little rally on Thursday, that could be a bullish sign. So I'd never say no. You're not too late. Oh. KM says, did you end up buying Elsight as it pulled back? No, I did not. And then there's a lot of comments, which I won't get into. Apparently someone on Hot Copper posted their AI opinion for Elsight. They asked AI using Aussie slang if Elsight was currently a good investment after seeing people do that on other stocks. Very funny. They got the lay of the land. So I won't go through all these replies, but interesting replies for Elsight. I did not buy in on any pullback. Let's have a look. Oh, it has pulled back. That's right. So I think I mentioned I might buy in a pullback with Elsight. And went all the way to $1.80. I missed this one. Okay, so I have not bought in on the dip. The main reason is I wasn't really paying attention on Friday because I went for a big hike, and it wasn't a big hike. It was a hilly hike, mountainous hike. Anyway, so thank you for telling me that. But I would have actually seen this chart later in today or tomorrow as I go through the rest of my charts. Trader Hooper mentions that Corvest released results after you finished recording. Yes, they did. They did. Why? Corvest, why did you release results in the afternoon? I was waiting for this. So Corvest typically is the first company to release their results. This is, for me, the start of results, or half-year, full-year results. So they released it on the 25th of July. If you go back 1 year, so in January, they released on the 20th. And I have to go back 2 years now. And last year, they released their results on the 26th. So I was sort of thinking they might release it on Monday because they did release it before training began. And then they released it just before training finished. I was like, why? But they tend to do that. You can see back in January, they released it at 2 p.m. And I'm wondering if they did the same thing last. They did. They released it at 4:06 p.m. In fact, they released their results. Oh, they did. They did release a presentation. So they released it after trading had finished last year. Okay, so this is something they do. I am going to do a standalone video on Corvest just because they released it first. I do this, I think, with Corvest a lot. Yeah, I do this with Corvest a lot because they release results. The first company to release results, so I always do a video on them. And I've done quite a few videos on this company. And because I've done this, and because they release results first, I'll have a look at their results. I ended up buying some shares in this company just because I had looked at this company quite often, and I bought some shares. And so when they released results, I had a quick look and I went, yes, results were pretty good. Results were pretty good for Corvest. So I'll do a standalone video on Corvest. So look out for that. Anyway, so yeah, and the chart does look good. So I'll just give you a nice little look at the chart. Oh, there was a breakout. There was a breakout the other day. So again, this is a long-term hold. I'm not really trading this. And the share price broke out above 11.20 a few weeks ago. There you go. Go Corvest. Okay. Matthew H. Check out XEC, ASX Emerging Companies Index. Looks like it's breaking out, which bodes well for small caps. Okay. Maybe I should put this into my... Maybe I should put this into my... Is it very similar to small caps? XSO. Let's have a look. XSO. Oh, it's very similar to XSO. Although, very similar. So I don't think there'll be much difference. Yeah, there's not much difference between the two. And I'll talk about XSO tomorrow in my technical update video. And definitely some of these indices in Australia are looking much more interesting. So thank you for that, Matthew. And finally, Mace says, do you still think the SYA chart looks meh, as this may be the start of a short-term uptrend? Now, a few of these lithium companies' charts are looking really interesting, and I do have two positions in I have positions in two of them. Core Lithium. I think Core Lithium is looking interesting. And the other one was Lindian Resources. I think this one's looking interesting as well. Now, just because they look interesting doesn't mean they're going to go really bananas from here. So let's have a look at Sayona. And in fact, I'm going to have a look at Pilbara before we have a look at Sayona. This is another one I'd be paying attention to. But I don't think it looks, it's starting, it is. It has signs of maybe a turnaround, but we've had this before with Pilbara, where it looked interesting and then no. So let's have a look at Sayona. This is a producer, if I remember correctly. And yeah, this one is showing the same signs. So we're seeing some really interesting charts for lithium companies, and Sayona is one of them. Sayona is one of them. The question I have now is how many could I play? I could play 5, 10, but I'm just concerned about lithium prices. I think lithium prices are even going up as well. Okay, so that's all I have for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.